All right. Hello and welcome, everyone. Happy to see you all at a noontime presentation for our Q3 update.
Good afternoon.
Yeah, excited to see you all. We will go ahead and jump in. A couple of housekeeping things. If you have any chats or questions, go ahead and put those in. The Q&A box is the best way to put those in, but if you put them in chat, Rachel is monitoring that as well. We do try to monitor that as we go along and answer questions like right in the moment if we're able to fit that in. If not, we do make sure that every question is answered by the end. So feel free to liberally put in your questions. We want this to be a valuable use of your time and for you to get what you want out of the presentation. And I think that's everything in terms of housekeeping.
Yeah. Let's dive in. We've got lots of fun stuff to cover today.
All right. Can I get just Yep, everything looked good for our screen share. So this is our Q3 2023 update for the Black Swan Real Estate Funds. Typical disclaimer that we share each time is our presentations on our performance updates is both historical data, so that's factual taken right off of the events that have happened, the P&L, but then there are also forward-looking projections. Information that's historical is factual and we're presenting that. Forward-looking projections are always just that. They're projections, there's no guarantee that those things will happen. That's the disclaimer here. And then a little bit about us. We likely have some new faces today. We've attended several conferences recently and grown our audience. So if this is your first time here, welcome. This is Nick and Elaine Stogberg. We're the owners of Black Swan Real Estate. I'm a psychiatrist by training. Nick had a career in technology. We invested in real estate through our own marriage, reached financial freedom, and then started working on a larger scale with passive investors. And now we have our private equity funds. We have about $1/3 billion in assets under management. About 2/3 of our portfolio is in Rochester, Minnesota. About 1/3 of our portfolio is in Tacoma, Washington. We're very vertically integrated, and a huge piece of our vertical integration is our property management company, Black Swan Living. We're going to talk a lot about that company during our update today because it informs so much of our operations and then therefore the success of our assets. We work directly with investors. Many of you on the call today are investors in these funds. We've raised about $60 million of capital. We have the wait list for Black Swan Fund 3 open. You can add your name to that list at blackswanfund3.com. Nick and I are cooking up some ideas for Fund 3. It is not open at this time. We're really trying to make sure we have the best opportunities before we open that fund, but please do add your name to the wait list if you'd like to be amongst the first to know. We have a very active real estate sales team. In 2022, we had about $75 million in sales. And to put that into perspective, that puts us into the top 1/3 of 1% of all agents at Keller Williams. And then we're working on a $40 million ground up construction project, Stonehaven Townhomes, 115 units in Byron, Minnesota. We could probably do a whole webinar on Stonehaven at some point. So maybe we'll do that. If there's interest to hear about new construction, let us know. And we're happy to dive deep into that. So that's a little bit about us. Some frequently asked questions that come up that folks often want to know is how to access your K1s. So K1s have all gone out for all investments. You will have received them in 2 separate ways. The first is via safe send returns directly to your email. So you can search for that in your email. That's an encrypted way that they're sent to you in your email. And then we also have uploaded everything to the InvestNext portal. So it's there for record keeping, for many, many years to come. So probably the easiest way for you to access your K1 at this time is to just go straight to the InvestNext portal because that safe send return email was sent, months ago. So it's probably deeply buried in your inbox. If you have any questions about how to access the portal, I encourage you to reach out to Rachel like right now because the tax deadline is coming up and we want to make sure that we're able to help you with accessing that document if you need that. I talked a little bit about when Fund 3 is coming. It's coming soon. We don't know exactly when. Again, we're trying to be patient and make sure that we're putting together the absolute best opportunity.
Looked at a deal yesterday.
Yep.
So, yep.
We're always looking. We're always underwriting, always making offers. The InvestNext portal, the website is blackswan.investnext.com, and then you'll have a username and password to access that. A little bit about our next in-person event. So we just finished our 2023 in-person event. We call it Real Estate, Real Life, because we really think that real estate without mindset is, somewhat meaningless. Like, all of the passive income in the world doesn't help if someone doesn't have a good, strong, robust mindset. And then conversely, mindset activities can really influence someone's real estate investing decisions, because there's a lot of uncertainty and risk and confusion in real estate, and coming at it from an empowered place, really has been a huge part of our real estate investing journey. So that's the whole theme around which we do our in-person event. We call it Real Estate Real Life. We've announced the dates. So our dates are May 17th through the 19th of 2024. Tickets are on sale. I know Rachel has a really amazing promotion going right now that I believe expires at midnight Central Time on Friday. We're essentially keeping our ticket prices right now at 2023 pricing. This will be the lowest that they're offered, for the duration. So if you'd like to come and visit us in Rochester, meet the team, do a lot of networking, a lot of real estate education, a whole evening around mindset and legacy, and then get on a charter bus and tour the properties, go ahead and book your ticket. And then some of the things about our structure, we have no fees at the asset management level. We do that to have complete alignment with our investors. So the only way we can profit is from the buildings themselves, the same way that our LPs can profit. And we've structured our deal that our LPs are made whole before there's any splits, so that we can only profit after our LPs profit, and the same way our LPs profit. That's very meaningful to us. What is an infinite rate of return? We do have a whole webinar on that. So maybe it's a lot on Rachel to run the webinar and everything right in the moment, and then also be searching YouTube. But you can search YouTube for our infinite rate of return, our cash out refi webinar that we did probably a year, maybe 18 months ago, that explains how you increase value in a property, do a cash out refi, and then hold that property indefinitely with $0 left in the deal. That's the basis of our entire real estate portfolio, both our personal holdings and all of our holdings in the private equity funds. And we really think it's a kind of a magical way to build generational wealth and get cash flow for decades.
Although it's getting to be a little more of a common phrase in the common consciousness. So we were at Ken McElroy's most recent talk, and he was all about the infinite rate of return. So we were excited to see that.
Yeah, absolutely. And then a lot of people ask about interest rates, and you'll hear, kind of, for asset specific things of how interest rates are impacting, specific deals that we have going. But in general, as a whole in the portfolio, we've always been big believers in fixed rate debt. We don't have a single penny of variable rate debt in the entire portfolio. I think in our entire career ever, we only ever had one variable rate loan for like a 6-month period, because it was a construction loan. We just are big believers in knowing exactly what someone is contractually obligated to do. So everything in the portfolio is fixed rate debt, with 4 years left on the note terms. Our highest interest rate debt in the entire portfolio is 6.25. That's for 2 properties that we acquired in Tacoma in spring of this year. Everything else in the portfolio is at 5.15 or lower. So we have very stable, good debt on the entire portfolio that allows us to sleep really well at night, and that hopefully allows you to sleep really well at night, knowing that that huge risk of variable rate debt is just not part of investing with Black Swan.
We have our conference coming up, as Elaine just alluded to, and the prices increase tomorrow. So today's your opportunity to lock in the 2023 price if you're one of our OG conference attendees, or if you're one of our investors who are on this webinar right now. We are really excited about next year's conference. This year was just absolutely incredible, and we're pulling out all the stops for next year. We're gonna have some fun announcements in the not so distant future about that. Now is your chance to lock in the best possible price while you can.
Yeah, so this is our Friday evening networking time that's on the rooftop terrace at the Hilton. That's where we host the conference. That is the #1 rated Hilton in all of North America. So it's really, in and of itself, 2 years in a row, which as far as I know has never happened in the Hilton portfolio. So it's just an amazing event space, amazing food, amazing people. And then you see here in the background, that's the Mayo Clinic, several of the Mayo Clinic buildings. And then of course we tour buildings in the Black Swan portfolio as well. So it's a really amazing event. We would love to have you out.
All right, so let's talk a little bit about what might be an elephant in the room. And we talked about this on our webinar for the last quarter. There's going to be a little bit of repeated information here because the recording did not complete successfully. The Zoom recording failed somehow, which has never happened before. So we're going to repeat, just a few slides here. This is a really critical one. So if you're invested in multiple real estate syndications out there, you have probably, been, asked to bring more money to the deal lately. There have been cash calls, capital calls. At Black Swan, we've never had a cash call, capital call, and we don't foresee a future where that's going to happen because we have so much low fixed rate debt. We're in a really good position. We have a very substantial amount of liquidity in our fund vehicles, and because we've done so many deep value add plays there. If you have any questions or concerns about that, like if that's a question that you have that you're coming to this webinar, we just want to answer that question directly. We're doing really well. And if you went back, 18 months and went to our educational content, we were kind of a little bit on a soapbox, like watch out for variable rate debt. We're at historic low interest rates. It's probably not going to remain historically low forever. And we're seeing a lot of real estate syndications that are using that variable rate debt. And so a lot of real estate syndications have gotten into trouble. We have no variable rate debt. Some real estate syndications were kind of clever and purchased rate caps. Those are insurance policies that, if the rates go above a certain amount, that insurance policy kind of pays out to defray that cost. But they would often have like 3-year debt, but a 1-year rate cap. And then you have to go buy a new rate cap. And buying a rate cap when you're already kind of past that maximum, interest rate, is kind of like buying an insurance policy on a house that's already burning to the ground. It's incredibly expensive to buy a rate cap. Sometimes there's contractual obligations to buy those rate caps on variable rate loan products. So that rate cap did not actually help them. It didn't provide the sense of security or safety that they thought it did. All of our debt is fixed for 5 years, often 10 years. We've got a huge amount of liquidity. We also have no insurance exposures, so there's a lot of escalations in insurance costs in Texas and Florida. Sometimes people are seeing insurance expense going up 5-fold. So if your insurance cost on that asset was $50,000 last year, it might be $250,000 this year if you can get insurance at all. And we're just not we're in not a very safe, not disaster prone location here in Tacoma and in Rochester, Minnesota. And then we're vertically integrated. So we have a huge amount of ability to control cost and control risk exposure with in-house construction staff, maintenance staff, cleaners, everything. And that helps us control some of the cost escalations that some other groups have seen as well. So things are going extraordinarily well. We never want to dwell upon the failure of others, but we want you to have a sense of just absolute peace, security, that things are going really well. We're right on track with where we should be. And this is something we have been talking about for a long time. And unfortunately, it has come to pass. And that's why we have $25 million on our wait list for our next private equity fund vehicle, because we perceive there will be some acquisition opportunities in the coming year, and we want to be prepared for that. So that's how things are going here. And we just want to make sure you understand where your investments lie and how safe and secure they are.
Something that we shared in our webinar presentation from Q2 is that we had 30% revenue growth in just 3 months this year, from April to July of 2023. And all of the chaos and fun and excitement and opportunities and learnings that come from that, it's really been a joy, I think, as investors and as entrepreneurs. Like, this is us, seeing the child mature into a teenager, or the teenager mature into an adult, so to speak. We've learned a lot as a company. Our team has learned a lot, has really put in extra hours. We do a lot of 1-day turnovers, as an example. So our maintenance team, our facilities team, whatever day that 30th or the 31st of the month falls on, they're working often until midnight or 1 in the morning, and then back at it early the next day. I'm just so grateful to them and how much they've stepped up to the plate to manage the portfolio very well. Blessedly, the revenue growth did not continue at 30% in 3 months, through this quarter, and that's what we needed, right? This growth it's exponential growth, and it's a lot of fun, and we're excited about it. But there needs to be periods where we're stabilizing and maturing our operations. And we're going to talk a lot about this. I do want to call out that because our Q2 webinar failed to record, which had never happened before in our history of doing all of our Zoom calls, we will repeat more than usual between our Q2 and our Q3 webinar, just to kind of make sure that we have this memorialized and to catch people up. We did share out all of the slides last quarter, which we historically haven't done, but we wanted to get as much information as possible out since there wasn't a recording. And then we're going to do a lot of repeat this quarter as well, in addition to sharing the new updates. This is probably one of the biggest updates. I'll let Nick share. He's super excited about this.
So we shared a map similar to this one in the last update webinar, but we've added kind of stars for every single one of the assets that we have in the portfolio. If you made it to the event, you got to physically tour these assets. It was so incredibly cool. So the blue boxes are where Hospital of the Future is coming in. So this is the declared site for a $4 billion investment that the Mayo Clinic is making in Rochester, which is just that's a frankly ludicrous sum of money. So if you do the math, that's an investment north of $60,000 per person of per population unit of Rochester that's getting invested in this community. Just a staggering sum of money to invest. The biggest focus is going to be on that large rectangle in the center there. That's the Osmond building that's going to be knocked down. And you'll notice that we own Zick Lofts and Uptown Landing, literally exactly kitty corner from that asset. And you can see we have the Nicholas, the Oliver, the Raymond kind of sandwiched between those buildings. Some of these are going to be, parking structures, standalone hospitals, and then there's just going to be a massive expansion to kind of the main campus there with that big rectangle in the center. You can see how we've kind of bought a bunch of lotto tickets. We bought a bunch of buildings, largely during the pandemic, during times when urban core was really struggling in the faith and confidence that Mayo is going places, and we think a big expansion will come at some point in the future. And those lotto tickets, they just came due sooner than we expected. This is just a staggering investment that Mayo has announced. It'll probably take 7 years for this to truly come to fruition, though we can see that construction activity already spooling up, and we'll talk to that a little bit more and some of the opportunities it's going to create in the coming slides here. So just love this map. This is an incredible windfall for everyone that's invested in our private equity funds.
So this is a time, if you're listening more podcast out, to take a look at your screen, or if you're from the recording, to take a look at the screen. So just to call out the specific buildings here, over here on what is my left is the Colby, that's held by Fund 2. And then we come over to Nicholas and Oliver, that's held by Fund 1. Raymond, Uptown Landing, Lofts, Zick, Uptown Terrace, Furlough, Hamilton, those are all joint ventures that preceded our private equity funds, that were really kind of our test cases as we were building out, working with passive investors. And then Riverview, Old City Hall are owned by Fund 2. Residence at Discovery Square is co-owned by Fund 1 and Fund 2. So both Fund 1 and Fund 2 are heavily represented in this area around Mayo, and we're very, very excited about where this is going to take the portfolio over the coming years. Another thing that was pretty neat to see is that the World Economic Forum did a case study on Destination Medical Center that was just published this month. I highly recommend that you understand Destination Medical Center, because understanding why we are in Rochester and why we are so kind of gung-ho for Mayo, you need to understand Destination Medical Center. So you can Google this World Economic Forum study and find this. You can also learn a lot about Destination Medical Center at dmc.mn. In brief, it is a large public-private partnership in the state of Minnesota. It's the largest public-private partnership ever in the history of the state of Minnesota. But more importantly, it's the largest per capita spend on infrastructure and development anywhere in the country, that's seeking to double the population of Rochester by 2030, 2040, so that Mayo has a larger workforce, so that it can be the destination medical center of the world. It's already consistently ranked, the best hospital in the country, the best hospital in the world, and really seeks to serve a worldwide population. And in order to do that, needs more workers to serve those patients. And that's a big part of why we're in Rochester, is because we saw an opportunity to invest in a city that, Nick was born and raised here. I did my training here. We live here. Our kids go to school here. It's consistently been ranked in the top, 1, 3, 5 of best places to live, best small town in America, best place to raise a family, going way back into the early 90s. And then Destination Medical Center is, what we perceive to be a rising tide, that we can do these deep value add projects that grow the value of any one particular building with a rising tide helping us along the way. Almost exactly the same reason we're in Tacoma. So Tacoma had an EPA Superfund cleanup site that really transformed the nature of that community, went from an industrial kind of gritty town to a great place for young families to live, for people to live in that Pacific Northwest area without the congestion and cost of Seattle. So those two stories really mirror each other, that we're able to do deep value add projects in an area where the overall community is on an upward trend. Destination Medical Center I think it's very fascinating, and I think that the World Economic Forum, did a study on it, says that they're fascinated by it too.
I wonder how many studies they do on towns of 150,000. It's just incredible, the amount of resources being poured into this community.
Yeah. So here's a quote from Kim Norton, the mayor of Rochester. Less than a decade into the Destination Medical Center initiative, the model is a proven success, addressing the long-term infrastructure necessary to prepare Rochester for its innovative future as a global destination for health and wellness. And then what you see here is we're at that Hilton rooftop looking out onto, these are the two Mayo buildings. This is the outpatient buildings, the Mayo building and the Gonda building, the Plummer building, which is the historic clinic that was named after Dr. Henry Plummer, who was essentially like the COO to the Doctors Mayo years ago when the clinic was founded. And this is now an administrative building. And then several other buildings that you see here are part of the Mayo campus. All right. So from one exciting topic to another, I'll take a breath and let you speak.
Sure. We've got a big announcement here. So we are launching short-term rentals in the Black Swan portfolio. This is an incredible opportunity that's coming at kind of the perfect time. We've got a huge amount of expertise in our roster, and that's not just our employee roster, our investor roster, lots of investors who've done short-term rentals.
So thank you. I'm sure many of you are on this call. We've had lots of kind of mini coaching calls with folks who are invested in Fund 1 or Fund 2 that have deep expertise as short-term rental operators, and we called upon you and learned so much in a very short period of time. We're grateful to you.
Absolutely. So the first thing you might ask yourself, if you've been kind of attending our webinars and stuff for a long time, is I thought the Stoggerbergs they're kind of cool on short-term rentals, right? And there were a lot of reasons we had. We're counter-cyclical people, and we saw this kind of flood of people into the short-term rental space for sort of the wrong reasons, kind of driven by tax advantages, and I think people kind of wanting to get into the hype, own a sexy, vacation property or something like that, and a lot of regulatory risk involved with that. So, Dallas just banned all short-term rentals. It's hard for me to wrap my brain around the amount of impact that has. However, there's a lot of compelling reasons why right now makes a ton of sense for short-term rentals in Rochester. So first of all, we are counter-cyclical. So short-term, I would say, is a little less fashionable right now. So it seems like the perfect time for us to get in. But seriously, in our market, all of real estate is hyper-local. It's hyper local. So just because if you have a vacation rental in Maui that maybe the bookings are down 50%, actually that's a terrible example. If you have a vacation rental in Florida, that's the bookings are down 50% year over year, which is a common stat to see in most of those high volume markets. The opposite has happened in Rochester, Minnesota. So all of real estate is hyper local. Just because someone else says, hey, I can't cash flow, or hey, long-term rental is it, or hey, short-term rental is it, or rent by the room is it. It really just depends on your market, your niche, your sub-market. So in Rochester, STRs got absolutely devastated by the pandemic. We'll share some stats with you on that in just a second. And those are finally starting to recover. This is a community that's driven largely by medical tourism, and that tourism it collapsed during the pandemic. So it made no financial sense for us to move into the STR space in Rochester during the pandemic when things were kind of on the rise elsewhere. And in Rochester, we do have a very stable, steady regulatory climate that favors us. So there's an inspection process. You have to have city inspectors come out and walk your unit and upcode egress windows, and there's a pretty extreme amount of regulation you need to comply to. And this regulation favors us because we already have compliance with all those standards, because we already have these certificates for all of our long-term rentals. So in a lot of markets, new regulation is coming in, frankly, probably less onerous regulation than the regulation that's already here. And that's what Warren would call a moat that protects your asset from competition. There's big moats that protect your short-term rentals in Rochester from competition. It is illegal to just spin up an Airbnb at your house in Rochester. You'll get a cease and desist from the city in about 48 hours if you just spin up a short-term rental in Rochester. You have to go get a rental certificate before you can go list on Airbnb. They scrape Airbnb every night, and they send out cease and desist letters for people who are operating unlicensed Airbnbs. We already fully comply with those regulations, and they allow up to 25% of any apartment building to be operated on a short-term basis. So we have many buildings that would potentially comply beautifully with this regulation. We could potentially bring hundreds of units into service as short-term rental units with 1/1000th of the kind of hurdles and regulatory challenges and costs that would be required for anyone else, kind of operating that space. The next reason why we really want to do short-term rental right now is because we have the scale to do it operationally. We've got in-house cleaning and maintenance. If you wind back the clock a year, we were relying on vended services for those things. And using vendors for occupied short-term rental units is really challenging. Having those cleaners in-house on staff is going to give us the power that we need. There's not a lot of acquisitions going on right now. We don't have anything under contract. We've got our wait list for Fund 3, but we don't have a lot of acquisitions in the pipeline. So this gives us the focus that we need to really do this right. We're really excited about that. Hospital future is coming, so it's going to take probably about 7 years for that hospital to really kind of come online. If I'm to pick a date, an educated guess, it'll take a long time before those medical jobs really materialize. There is a fully completed $4 billion hospital that needs more doctors and nurses and respiratory therapists. But in the meantime, there's going to be thousands of engineers and architects and construction contractors that are going to come to our community. And those people are probably going to need a lot of short-term and mid-term housing. So furnished, all bills paid. And we think in kind of the higher, occupancy space, there's going to be huge demand in the immediate term for that. And finally, Rochester has zero hospitality units under construction right now, which is just absolutely incredible, given that there's 4,600 hospitality units in our community. That's a huge number for a community our size, because there's so much, kind of medical tourism historically. But here's the thing. So many people got burned during the downturn in short-term rentals and in hospitality during the pandemic. That's difficult to see when an equity group, when an investor, and critically when a lender would approve a new construction project for another hospitality facility, another hotel in Rochester. So we see huge demand coming and no supply, and that means that pricing is going to go up. And that's exactly what we're seeing in this moment. So we've got some slides here, some charts on the next slide. So this is ADR, occupancy, and RevPAR, and you can see they're all very similar charts. So RevPAR.
Do you want to explain what those are real quick?
Yeah, yep. So RevPAR is when you multiply your average daily rate times your occupancy. Average daily rate is if you rent it for $100 one night and $50 the next night, your ADR would be $75. It's the average of those. And your occupancy is just how many days out of the month your unit is occupied. If it's occupied 20 out of 30 nights that month, you'd have 66% occupancy. So you multiply basically your average, daily, nightly rental rate times that occupancy, and you get RevPAR, and that's the income per day you might expect to get for a market average for a hospitality unit in that area. So RevPAR was about $76 a day pre-pandemic. So you go to right before the pandemic, it was $76 a day, and then it collapsed almost instantly to $35 a day. And it's mostly recovered. It's up to $65 a day now. So it went from 75 to 35, back up to 65. And you can see there's a pretty slow and steady improvement in RevPAR. That's the purple bottom right chart. You can see a very slow, steady increase recovery in RevPAR. And through the pandemic, it was not lucrative to do short-term rental in our market. Just there were too many hospitality beds for not enough guests. That drove down occupancy, and average daily rate drove down RevPAR. And now we're seeing that come back in a huge way. So let's
go ahead. This is your business.
I'm on a little roll here. Yeah.
This is all we talk about.
Yeah.
We talk about this in the morning. We talk about this at work. We talk about this at night. It's exciting. It's been a long time since we've truly launched like a whole new business. And so it's neat to launch this business inside of the private equity fund. So Nick is definitely
so massive.
Nick is definitely the driver of this, and
yeah.
I'll let you keep going.
Let's be clear. Elaine and the kids and I were out furnishing a unit until like 9 o'clock at night, opening, toasters and silverware and stuff like that. We've got a huge, amazing team. But when you're doing something new as an entrepreneur, even though we have a third of $1 billion business, it's important to do it yourself, to make sure you're understanding firsthand what the challenges are, where things are working, where they're not working. So I'm like personally CC'd on the emails on Airbnb and stuff right now. We've got probably half a dozen people working on this right now, but this is something that we're very actively directly engaged in. So let's talk about the three assets we're kind of test marketing this thing to see how it goes. First one is Resident Discovery Square. We're being very opportunistic, very thoughtful in how we're kind of test piloting this. So the reason why we love RDS is because it's got a ton of 2-bed units, 2-bed 1-bath units that they don't rent as well on a long-term basis as like 2-bed 2-bath units or 1-bed 1-bath units. We don't get much of a premium for the 2-bed 1-bath units on long-term rental, But in hospitality, there's not as much of an expectation. You get that second bathroom, even if you have 2 bedrooms. There's just less of an expectation there in the hospitality space. So there's a great kind of sour spot in our long-term rental portfolio and a sweet spot in the hospitality portfolio. And that dynamic is kind of what we're trying to capture throughout. RDS, we're about to build out a ton of units on the main floor that could potentially go all hospitality. They're going to be these really beautiful, unique units, urban core lofts that would just market extraordinarily well for short term. And this is going to set us up for maximum success in the coming year, because we're going to need to refinance this asset next fall. We assumed some short term, extraordinarily favorable financing from the seller when we bought it. And these short-term beds would allow us to basically maximize our income, maximize our net operating income to get the best possible financing package next fall. And you can see our very first review there. Was a 5-star review from Fady. I'm not sure how to pronounce his name. So this is why we're personally involved in these things. So this individual booked like 2 days after we opened the Airbnb. We started generating revenue almost instantly. Booked for like 3 days, ended up staying for, I don't know, 7 days or 9. Yeah, just kept extending his stay as there was more tests at Mayo and everything. And then immediately said, this was a phenomenal experience. I need to come back in a month for a month. And I really want to stay with you guys. Is there anything I can do to stay with you guys? So just an incredible first data point, right? This is the whole point of the experiment. You never like, are we going to put it online and we don't get any bookings? Or are they going to be low quality bookings? Are they going to be challenging customers to serve? And our very first customer was absolutely incredible customer and a repeat customer.
We're also bringing Old City Hall online. So what we love about this building is it's very close to Mayo. It has really beautiful historic charm because it was, literally the Old City Hall. It's a 1920s Art Deco building. You can see just one picture there of the light fixtures in this building. There's vaulted units that used to be the city council chambers. Many of those are in our other webinar updates or our launch webinar for Old City Hall. So take a look at those. So you can kind of see the marketing kind of creating itself. Like, people aren't coming to Rochester for a vacation, but that doesn't mean that they don't want to be comfortable and have at least somewhat of a memorable experience when they're here. And so you can see the idea that they're staying in this, gorgeous place that is part of the history of Rochester, walkable to Mayo. So we're excited to convert those very premium units in Old City Hall to short-term rentals. We have beautiful furniture picked out that matches the age and the decor of the building. I think that's probably everything for Old City Hall. And then we're also doing some in Nicholas. So I've personally taken on the Nicholas project. So again, just get our hands dirty and figure out what is the exact toaster that we want. What is the exact sort of design finish that we want? How do we want to build these? How long does it take to launch a unit? We love being, as Nick calls it, in the gemba. That comes from Japanese culture, being at the place of real work. So I'm launching our Nicholas units. This is the only apartment building that is in the middle of the downtown campus, which is where the outpatient care is provided at Mayo Clinic, and the St. Mary's campus, which is where the inpatient care is provided. And patients go back and forth between the two. They might see a physician in the downtown campus and then have a need for an MRI or breathing studies or something like that, go over to the hospital, have those, and then be back the next day at the downtown campus to review the results with their team. So people love to live here when they work at one of those 2 campuses. And we think it's going to be great to set this up as a short-term rental. There's lots of parking. It's very close to downtown, but it's in a residential neighborhood. So it feels like home. It's walkable. It has a great unit mix. And then what's most exciting about Nicholas is we are converting our ADA units. So it's a requirement in code that apartment buildings have a certain percentage of units set aside as ADA units. So this means like the counters are shorter. There's no cabinets under like the kitchen sink or the bathroom sink. There's grab bars in the bathroom or maybe a roll-in shower. And unfortunately, those don't rent very well from a long-term perspective, but we think they're going to be great for a short-term perspective because either folks who are able-bodied and don't necessarily need those ADA amenities won't mind kind of the nuances of that ADA unit. They may not even, necessarily notice them in a short stay. But for folks who do have mobility needs that are excited to have a fully accessible ADA unit, there's just a few things we would need to do, like mostly just like take carpets off of the floor so that they don't trip on like walkers or wheelchairs. So we think it's kind of a great way to, again, like Nick said, take some of the units that don't do well in our long-term portfolio, convert them to our short-term portfolio, and serve a need. So serving folks to say we have a fully accessible ADA unit with ground level access, elevators, covered parking, all of the things inside of it are set up for ADA access. And then for folks who don't need those particular amenities, it will just rent as a normal short-term rental unit. So very excited about this. We've been spending our nights and weekends going to Target and making huge Amazon orders and unboxing all the stuff. And it's been fun.
Drum roll. So we have about 30 days worth of data now.
Here it is.
How do we do? So we've got 5-star reviews all the way. Our team just has absolutely crushed it in terms of serving our clients. And we've generated about $2,700 in gross receipts from our first short-term rental. And this would be on RDS unit 518. So I've got a little very, very simplified analysis here. Base rent on that unit would be about $1,600 per month. We have that discounted because long-term leasing in the off-season tends to be discounted. So I think we have it listed for $1,500. There'd normally be a utility charge of $75, Wi-Fi $55, parking $175. So about $1,900 all in to lease that unit on a long-term basis. And there's obviously significantly higher cost operating a short-term rental unit, but we estimate that our break-even point is about at the $2,700 per month gross receipt level. So that $2,700 on a short-term basis is maybe roughly equivalent to the $1,900 gross receipt on a long-term basis. And so we kind of we're at that break-even point out of the gate, and I have to think we'll get better at this over time, and we won't be in the winter. We'll be in the high season. Let's take a look at what that high season could look like. So we're using Price Labs for dynamic pricing, and this is June. So this is the absolute peak month. April, May, June, July, August is.
This is June of 2024.
Yeah,
so
June
these
2024.
are projections. So
these are our advertised prices right now for RDS 518, the unit that did the $2,700 a month. These are the currently advertised rates. The first time we get a booking for mid-June there at $300 a night, we're moving the 25% of the whole portfolio to short term because there's an opportunity here to get $6,000 to $10,000 of revenue from a single unit at the peak of the high season. And as you know, the way cap rates work and net operating income works and stuff, that really supercharges the value of the asset when it comes to a cash out refi. That's a conversation we've had with lenders about how they'll treat that income, and constitutes a massive opportunity to generate an improved return for the portfolio. This is another real-time data point. This literally just came in. So we got this inquiry from Kim, who's here for a liver transplant. And this is a very common persona for us to encounter. Again, this is why Elaine and I are in the nitty-gritty details of the business, rolling up our sleeves and making sure we understand this business before we really scale it to a hundreds of units level. So Kim said, "Hey, I'm coming back soon. I was just here and I'm on the list for a liver transplant. What an incredible opportunity to serve someone. But here's the problem. She doesn't know when she's going to get the call. And when she does get the call, she has to be here at a moment's notice to make sure she receives that life-saving liver transplant. And then once she's here, she will be here for months. So she requested a pre-approval through Airbnb is what it's called, for November 15th to January 31st, but then immediately said, "Hey, I don't actually know what the date is. Can you help me?" And I personally responded. So Becky is kind of our point person on messaging, but this was actually me writing a reply to this message, because in the red box, you can see that reservation amount is for $8,700. So this is a multiple higher than what we could have gotten on a long-term rental rate basis for this unit. And I said, "Becky, or Kim, thank you so much for reaching out. It's a privilege to have the opportunity to serve you. And we understand that by the time you get that call, it's unlikely that there will be a unit available at a moment's notice that would be available through that whole time. So you're in a little bit of a pickle here, and a lot of patients are going to be in that same pickle." And we said, "You are uniquely in luck that we are actively expanding the number of units we have to offer at this building and another similar building nearby. So I can commit to you that we'd be able to set up a unit for you to stay as quickly as possible if we don't have something available when you get the call." So we have this insane unfair advantage, this insane comparative advantage, that we have a huge inventory of units available. So if Kim calls and says, "Hey, I got the call, I'm getting a liver, I'm going to be there today," okay, we've got some furniture laying around, maybe we've got a vacant long-term rental unit, we will furnish that on demand for you, and we'll get a $9,000 reservation for it. Heck, if we had to furnish an entire unit with all new furnishings, we'd pay for those furnishings in that first reservation alone. So seeing these little data points here is just incredibly, incredibly encouraging about what the future potentially holds for this line of business.
Super excited about short-term rentals. Let us know if you have any questions. We appreciate all the enthusiasm and stuff in the chat there. As you can tell, we're really excited about this, about where it could take the portfolio, particularly RDS and some of our other buildings closer to Mayo there.
Getting lots of questions on short-term. Feel free to put that in the chat, and we'll circle back around to it later in the webinar. That we've got still have lots of content to cover, if you can believe that. So we're gonna dive in.
Yeah, I'll answer the two questions that have come in. With midterm rentals, could we market to traveling medical professionals? So interestingly, Mayo does not use very many traveling professionals. They did during the pandemic and found that there was a lot of cultural backlash from their full-time staff. And so they use very few traveling nurses or other professionals. So, other cities certainly have a much bigger market for that than is here in Rochester. For the small number that are here, certainly we would host them and seek to serve their needs as much as possible. And then someone asked, do you anticipate any blowback from long-term renters once they realize there are short-term rentals with folks coming and going? Will short-term rentals be grouped together on a floor or mixed in? Will long-term rental prices remain stable or balanced with short-term rental income, and go with whatever is working best? So lots of questions there. The easiest one to address is, yes, we're going to group our short-term rentals together. And in fact, in RDS, the main floor that we're building out that we've shared, many of the construction updates on the previous performance updates, those all have exterior access because they were meant to be commercial spaces, like a little clothing shop or a hair salon or something. So those all have front doors directly to the street. That whole floor we're intending to convert to short-term rentals. And then on the existing floors, it will be, one floor together.
Fifth floor at RDS. Yep.
And then the
third floor at City Hall.
One of the nice things about having a vertically integrated property management company is our staff is in these buildings, all day, every day, responding to maintenance tickets, doing leasing showings, doing unit turnover cleanings, doing common area cleanings, taking care of the lawns. So people see it from a different perspective, right? A maintenance person is going to see that building very differently from, say, a leasing agent, very differently from, say, a person who's cleaning the common areas. So if that were to happen, we will know right away and we can, take steps to address it. But it's our understanding from, many other buildings in Rochester that there's an expectation in Rochester. It really, I think it comes from Mayo, and I think it comes from a place of love. Like, we have this beautiful city because we serve these people that come to our doors, and there's just an expectation, like at restaurants and
yes.
At other places in town, that we're so grateful, that you're here and that we're able to take care of you. And because of that, our city has income and nice infrastructure. And so I get the sense that people will either not notice that they're short-term rentals. If problems arise, our property management team can address that very quickly. But I get the sense that most people will just kind of understand that that's part of living in a building close to Mayo. But it's an excellent point to bring up.
Yeah, to give you some idea of how incredibly strong that culture is, there's actually an ambassador corps in Rochester. So people, they've got like pins and vests and stuff, and they literally just wander around downtown trying to help lost patients find their way. So this whole community, like think about the power of that. Like there's just people that volunteer to just help people that are here for care. And there's an incredible culture of just love and service. It's a spiritual thing. And most of the tenants in most of our buildings are going to, align with that. And a person that's here for a liver transplant, they're not throwing a party. They're not an obnoxious tenant. They just need a place of peace and rest. And it's going to be a very easy population, we think, to serve in tandem with our long-term residents, who are frankly the healthcare providers they're providing care to those patients. So it works.
Absolutely. Rachel is reminding me that we have 20 minutes left and 55 slides.
Yeesh.
So we'll go a little bit faster through some of the updates here. So some updates for Black Swan Living, our property management company. That's many of our team members here at the Saturday night event that we had for when we hosted our real estate real life event just last month. We have a mindset and legacy seminar in the evening. We dress up and take pictures together. It's a lot of fun. We're very excited to announce that we were nominated and then awarded the Rochester Best of the Best for Property Management Company. Super excited about that. Thank you to many of you who voted for us as well. Very excited that kind of acknowledges our place as a newcomer to the market. I mean, we've really only been doing large scale property management for about 4 years, but we think we have a premium product and premium service, and that has now been acknowledged by the community. We'll have plaques up in every building.
It's a big deal.
It'll be a big part of our leasing agents scripts of telling folks, why we're a premier property management company and why they should rent from us. And then 3 of our buildings, Nicholas, residents of Discovery Square, and New 52 were all nominated for best apartment building. So we're very excited about that. All of our lawn care and snow removal is officially in-house. We're very excited about the cost savings and the quality and control that that's going to bring. We had our all hands snow meeting yesterday to make sure that everyone understands the safety protocols, the timelines that we expect, how to use the equipment, how to communicate with each other. Right now we have 43 full-time employees, and then we have 6 remote team members that are supporting our 24/7 customer service activities. We did over 2 million in construction draws during Q3, so we're very, very busy on that side of the business. 43 renovations were complete, 163 leases signed, almost 2,400 maintenance tickets closed.
A lot of tickets.
It's a lot of tickets, so a lot of just, you can imagine that's just, day to day to day work. And then on top of that, we're doing those large renovations as well. We signed 93 lease renewals, and then we were also ranked the top 1% of real estate agents in the state.
So I could spend a whole webinar just
Why don't
talking
I
about
do it?
lawn
That
and
way it
snow.
doesn't take a whole webinar.
I was just going to skip this slide.
So lawn and snow, we're super excited about it. During our event, we had this like touch the truck event where we spent just 30 minutes walking, 5 minutes to get some sunshine, to go out and see our lawn equipment, to see firsthand, because we're able to purchase all of this lawn equipment, because we have a full-time staff, because we understand the value that every dollar we decrease in expenses increases the net operating income of that building, which then increases the value of that building, which gets us to our cash out refi faster. We're willing to do this hard work, and we're very excited about it. And then we've hit the minimum scale that's needed. Sorry, I just kind of accidentally scrolled some slides there. So we have 1,000 units right in Rochester within about 25 minutes drive of each other. So how did we do for lawn? So we brought all of our lawn care in-house this spring, and now we're doing all of our snow removal this winter. We did it that way on purpose because snow removal is exponentially harder than lawn care. We had no disasters. We were very excited, and this is for our lawn care. We were very excited about that.
No one ran a lawnmower into a building.
Yeah,
there were no major issues really.
Yep. When you launch a new business, you don't plan for, or you don't hope for disasters, but you plan for them and you expect them, and then you need to learn and grow. And we had no disasters. We participate in what's called No Mow May. So this is to save the bees. The longer essentially weeds and things can grow in May, the better that is for pollinators. That's really hard to do with third-party vendor services because they want to start their contracts at the time that they start their contracts. It's really important to us, and we actually think it's great marketing for our buildings to say, we put up these big signs that say No Mow May, and we're saving the bees. And we have a significant portion of the lawn space in Rochester, and we're able to do that with our in-house staff. This was an exceptionally high dry summer, and that led to some of our positive outcomes because we needed to mow less frequently. So a vended service, you typically pay a flat rate for the season, and if it's a dry summer, you don't benefit. If it's a wet summer, you do benefit because they need to mow more often. We lucked out that our first summer doing this was a dry summer, and so many of our properties we did not need to mow very often, which drastically reduced our costs. Of course, there will be wet summers in the future, and we'll have to take on that extra work. So far, we have saved about 70% of cost savings to the portfolio.
Staggering.
We estimate a minimum final cost savings to the portfolio of about 30 to 50%. So 2 line items on the P&L that are consistently some of the most expensive things that we do. Maintenance, lawn and snow are like the 3 biggest expenses for operating a building, and we're able to drastically reduce that cost while providing more quality and control. It's a win-win deal. That's why we're so fanatical about vertical integration. Very excited about these 2 pieces of deep vertical integration so far. Talking about the event again, so I'll just kind of blast through this. Here's some pictures you can see of our property tours, our mindset and legacy evening. We do all sorts of experiential activities, and not just teaching a topic, but doing an activity to really drive the learning in and really get to experience it firsthand. The dates are May 17th through May 19th. We hope to see you there. And then RDS.
Yeah. So RDS, probably one of the best deals we've ever done. Let's talk about ways that we've reduced expenses here. There's over a 25% reduction in taxes from $525 per year to $410 a year. Lowered our utility expenses. We eliminated a contract where they were cleaning mats and replacing paper towels. We have in-house facilities teams, so we can save a huge amount of costs here. We estimate about $10,000 a year in cost savings. We've got an unfavorable cable contract we inherited. We're working on unwinding that. We could save about $37,000 per year with that. We could spend a whole webinar on just that alone. That adds up to about $200,000 per year in potential total cost savings, for about $4 million of asset value at a 5% capitalization rate. There's a ton of activity. There's probably, I don't know, 5 staff members on site at any given moment whenever I go there. So we've closed on the northwest parcel at RDS. We're working on renewing and extending the commercial master lease for UMR, University of Minnesota Rochester. This is a $10 million lease agreement. It's just a staggeringly valuable lease agreement we're able to secure. Working on building out the main floor units. So these are these urban lofts that we're building out. We're going to add about 21 units here in the next, probably 5 months. Slowly, steadily working through that very frustratingly slow permit approval process. But we have our first signed contract at this time for one of our subcontractors. All the bids are finalized, plans are finalized, waiting for this very last approval from the city. The city has approved our trees. But the Forestry Service said, yep, you can plant these trees, but they have not yet approved like our plumbing. So I don't know how they prioritize that. But this is going to be unbelievably successful. And these will most likely become short-term rental units.
This unit that you see right here was our first loft unit that was finished, and we have a signed lease, and I believe that person has moved in. Rachel, correct me if I'm wrong, but you can see our real estate real life attendees had an opportunity to tour that unit, and then the final thing we had to do was just put in blinds, the remote controlled blinds, because those are 2-story windows, and then we got a signed lease right after that. So very excited about that proof of concept. Here's rent growth from RDS.
It's a headline slide right here.
Yeah, so we acquired the building in April. In May, our rent was $175,000 per month. In October, our rent is now $189,900, so essentially $190,000. So we've had $15,000 per month of rent growth in about 5 months. You can see that, depicted here on the bar graph. Very excited about the performance of this building. We're continuing to optimize it. We'll continue to, hopefully increase the income even more with our short-term rental strategy, building out those main floor units. So
less than $1,400 a month to $1,569 in 6 months. That's just a staggering climb for such a large asset.
Yep. We've talked a ton about our build outs for RDS. So in the interest of time, we'll skip that update this month. Nick just shared, some updates about the permits and those sorts of things, but you can kind of see as I scroll through the slides here, our amenity space, the finishings that we've picked out, how we anticipate that we're increasing the value of the building by about $3.1 million through the increased revenue from those buildings. We're also working on the southwest parking lot. We're still, we're working our hearts out to try to get that done this year before the ground freezes. We're waiting on just the final little tweaks from approval from the city. And then the actual, physical work is not that hard to put. It's already a flat lot. It has gravel in it. We're just, turning it into a permanent parking lot. That's going to be really valuable for not only our long-term rental tenants, but for having parking for short-term rentals for guests. If we do eventually have any commercial tenants in that bottom floor having parking for their customers. So very excited about pushing this forward, hoping that it happens this year. If not, it would be first thing next spring. One of the reasons we're very excited about RDS as a whole is because it is like literally half of a city block away from the expansion of Soldiers Field Park here in Rochester. This is a huge redevelopment that the city is putting on. It's already a lovely park, a really nice place to golf. There's multiple different playgrounds, a track, but they're making it even nicer and rebuilding everything, rebuilding the aquatic center, putting in pickleball, lots of picnic areas, all sorts of things to really make this like the outdoor hub of Rochester. And RDS is like a 90-second walk from this. So again, kind of going back to that, why we love Rochester is we're able to buy RDS and do our own work to improve the value of RDS, but then the city is doing things around it that's just improving the value of all of the real estate. And so we're excited to be part of that rising tide. talk about NOI improvement.
Yeah, so we talked about some of the expense reductions that we've achieved, about $200,000 in potential expense reductions, and then increasing income through escalating rents, adding units. And this does not consider the potential impact of short-term rental, which would be obviously a potential significant upside here. But the seller financials when we purchased this building were about 1.2 million in net operating income. Our 2023 pro forma, we're on track for about 1.485 in NOI. So that's a pretty huge improvement, in my opinion, given that we closed on this thing in April. And it takes a long time to kind of get inertia. We had to, turn over probably about 40 units in that building. So just a huge improvement, I think, in a very short period of time. And we're right now shooting for about 2.1 million in annualized NOI for 2024. We'll see. We need to get those units into service, the new units we're adding. There's a whole lot of variables that go into this, but hypothetically, if you want to just using some very round numbers, at a 5 cap, the building was worth about 24 million in place with that 1.2 million NOI. And if we get to that 2.1 million NOI at a 5 cap, that'd be about 42 million in value. Right this second, market, interest rates, everything, I think it's probably more like a 6 cap. So maybe that'd be 35 million. But the point is we're able to add massive, massive value to this building with all these improvements.
I think, a key takeaway from this slide is people ask about our cash out refi strategy. And you can see that, if kind of all of the stars align, which they rarely do, right? Business is just like life, it's messy. But if all the stars align, we think the value of the building could be 42 million. Well, we don't need to get anywhere close to that to successfully do our refinance. So as we're acquiring buildings and doing our value add plan, there's significant margins that are built into it. I don't think we've ever acquired a building where we thought we only had exactly what we needed to do the cash out refi. In my opinion, that would be reckless. You need to have that buffer because there's just always things that happen in business. And so you see that here, that's why we're not worried about, potentially real estate values going down or other things happening in the market because we have so much built-in buffer. Hopefully that's helpful to see. We are going to do Fund 2 first today. We've always historically done Fund 1, and as we were making the slides, we just said, let's mix it up a little bit. So Fund 1 updates will be at the end. And also because Fund 1 is more mature, there's fewer major updates to share, whereas Fund 2 is very much an active portfolio. So in Fund 2, there are all of our acquisitions. Let's talk about Tacoma. So we've mostly focused on Rochester so far. Our Fund 2 portfolio has assets in both Tacoma, Washington, and Rochester, Minnesota. We have our Tanara Villa Apartments. This is one of the largest acquisitions in Fund 2. It was the first acquisition in Fund 2, $28 million purchase price, 130 units, 1970s build. We're doing an exhaustive renovation of every single unit, all the common areas, all the exterior, and then a major landscaping project of this big central lawn that you see here.
So we went big on this asset. We vacated about 29 units as soon as we took over, planning on doing a kind of massive construction project. And in retrospect, that was a mistake because it attracted the attention of the city. And the city said, whoa, 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 you guys are doing a bunch of unpermitted work, which was untrue. And this has happened before. We like to go big. We like to move fast, and it often works out. But in this case, the city has just been unbelievably, kind of once their attention is called to something, they have inspectors just kind of like hanging out on the job site, just saying, oh, did you pull a permit to, take that shovel of dirt? So for example, we're building a pavilion, a pergola, and they want us to pull a permit as a new structure, like building a house. And we're like, come on, guys, this is crazy. So we're holding on the construction of that pavilion. We're doing the interior clubhouse, which they're letting us do without pulling a new construction permit. And we're doing an irrigation system for landscaping thing, and they want us to upcode backflow preventers and water shutoff valves and do a new water main connection. And it's been challenging working through the regulatory climate there. But at the end of the day, we have a really high quality product. We've been able to do an incredible transformation on this project. So right this second, we have about 8 units that are 100% complete, 6 that are kind of close behind that, and then another 15 units that are in kind of various stages of renovation. We've not just kind of sat on our hands through this kind of hold up with the city. We've said, okay, what can we move forward on? Okay, we can go do flooring in this unit. We can go do sheetrock in this unit, even though we're waiting on plumbing permits and for the city's plumbing inspector to come out on these 17 units. And we're finally getting into a really steady flow. The city's like, okay, we've asked you to pull every permit, humanly imaginable. And I think we've got a good trust relationship with them going. And we've, finally got a really steady stream of units going through the renovation pipeline right now. Other really good news is that we already have an offer for really favorable construction financing. So this was a two-phase project. When we first bought it, there was 3 million of the 6 million of construction financing we needed. This is such an insane value add project, such a massive value add project that it's frankly sometimes difficult to get the bank or the appraiser to understand just how amazing you're going to make that asset look. So you kind of have to start out with this first phase, then you bring out that same lender or new lender later on and say, okay, you see how awesome it is. Can you see how a $6 million renovation project would make sense here? And we could get to these rates, or I'm sorry, to these rental rates. And fortunately, we do have a very favorable financing offer. We may or may not move forward with it because we still have another year of runway left in our current construction financing. We've burned through about 1.5 million of our 3 million of current construction financing. And we think we can probably get a better loan, a year from now, 9 months from now. But it's really exciting that a lender will come out, see a xenoscape of new construction. I mean, there's just 100 people swinging a hammer on this place right now, and for a lender to look at that and say, yeah, I can see what you're doing here, we want to give you more financing, that's a really good sign.
Garfield Apartments is also in Tacoma. This is a mixed-use building, probably one of our rougher buildings when we first acquired it in Tacoma.
Yep.
Lots of undesirable commercial tenants, and then the units on the upper level, the residential units, were in very serious disrepair.
Probably the lowest rental rate building we've ever bought.
Yeah. And it's right in the heart of Pacific Lutheran University, so it kind of has become student housing. It's not like designated student housing or anything like that, but these units are fairly small. They're a little more than like an efficiency or a studio apartment, and they're right on the campus. So it's kind of the vision that we saw for this building is unfolding, that we'd like for the commercial space to be things that are attractive to the people that are walking on that street every day. Things like little coffee shops, little eateries, little hair salons, and then that residential space to principally be young people and students. And that's what we're seeing. So you can see the renovation there. It's nothing exciting. It's just a nice, clean, safe place to live that people like because it's walkable to their classes.
In this photo, we spent less than $5,000 on this renovation. This was an ultra low cost renovation, paint, flooring, little touch ups here and there, and we're able to achieve staggering improvements in rent just through management and just loving and taking care of the building.
Yep. Next up is Kensington and Lauriston. This was our acquisition in Tacoma in April of this year, a little over $8 million for the purchase price, 63 Class C units across 2 buildings that are in an A++ location. So a really desirable part of downtown Tacoma. It's only a mile away from Tanara Villa. So we were very excited to kind of buy, like the ugly duckling on the block. This is actually one of the units that was renovated before we acquired it. We've not done a lot of renovations here quite yet. We're finding that people want to escalate in place, so there isn't a need to do major renovations.
We'll always take them up on that offer. So.
Yep. We have replaced the electrical panels for safety reasons in the building, but when we do commence renovations, this is what the design will look like in that building, in those 2 buildings. Some numbers that we have for Kensington and Lauriston. Our previous rents at time of acquisition were $11.95 to $12.95, and our leasing rates now are $12.95 to $15.95. So very excited about those escalations. If Tanara is like a 9 out of 10 in complexity, Kensington and Lauriston is a 3 out of 10, and you need those in the portfolio so that you can keep your focus on the one that needs your focus, but then still have these other profitable endeavors going. So it's good that we have a very complex project and then some simpler projects in that overall Tacoma portfolio.
And what they have in common is that our unrenovated units at Tanara, we've been able to achieve just spectacular rent escalations just through the common area improvements, improved management, picking up the phone when people call, and we're seeing that exact same thing play out at Kensington and Lauriston.
A little bit about residences of Old City Hall. So bouncing back here to the Rochester portion of the portfolio that's owned by Fund 2. This was a $5.5 million acquisition. Half of the purchase price was carried by the seller with no interest and no payments for 5 years. So we acquired this with only $500,000 down that was actually placed into a construction escrow. Our renovations here are going really well. 15 renovations are complete. We have 3 in progress. One of the major pieces of our renovation is putting in-unit washer and dryer. So to really capture these premium rental rates, people expect to be able to do their laundry in their own unit. in-unit washer and dryer trumps in-building unit washer and dryer, trumps, not having washer and dryer on the site. So we work really hard to get in-unit washer and dryer. That is harder than it sounds. All of the plumbing infrastructure and drainage infrastructure and electrical.
100-year-old building, no less.
It's tough, but we really believe that it's worth it. And we see it with the rates that we're able to get in those units that have washer dryer. So 18 have that. Our rent escalations are up about 36% in Old City Hall overall. And then, as we mentioned earlier in the presentation, we're testing out short-term rental. So this is one of the lofted 2-story units. This is actually kind of like the less attractive view of it. If you were facing the other direction, you would face these huge windows. I think they're like 10-foot windows. They're just so beautiful. They look right out onto First Avenue, bring in tons of natural light. And we're very excited to furnish this in a period appropriate way and test it out as our short-term rental.
Next is Hamptons. So this is a 12-unit townhome community that we bought, and it's just been spectacularly successful. I actually just personally walked every single unit last week because we were kind of wrapping up this project. So I personally walked every single unit to see what's the quality of our finished product. We walked that with our banker, and we just love to do kind of a victory lap with our bankers, and they were kind of blown away. We finished this project ahead of schedule and under budget. Ahead of schedule and under budget. That's
in 2023.
That is a rare feat in 2023. That's for sure.
That's a 2018 thing.
Our banker was like, Nick, are you sure you're done with this? Because we've got more money in the construction loan. I'm like, no, we're done. And they're like, okay, well, are there any other invoice you can give us? Because man, you really deserve it. Like, this is just incredible. We achieved 60 to 90% rent escalations with these renovations. Just unbelievably successful. This is going to be, this isn't a big project.
It's only 12 units.
But man, did we move the needle. This was an unbelievably challenged community when we bought it. Supportive housing, people with drug and alcohol rehab being housed here. And we've been able to actually relocate them, help them buy their own apartment buildings. They now have a dedicated facility in that program can live on.
That's a really cool thing.
Yeah.
They have their own building now that they can build equity in. And it's exciting.
But yeah, 60 to 90% ahead of schedule, under budget. This is just an out of the park home run success. And just the good we've done with the community with this project is incredible. Very similar as Douglasville Townhomes, just a huge change. The people who were here for our conference a few weeks ago, they remarked on just what an insane night and day difference it was to tour this community. So we love getting law enforcement engaged with our communities in a really constructive way. So we did a bike rodeo here a few weeks ago. The police come out and do bike tune-ups and do obstacle courses and stuff. From a financial,
this woman on the ground on her knee, that's Stephanie, our director of operations, who many of you either know or have had emails with. She organizes a lot of our community events. So that's her there with that little girl on the bike there.
Yeah. And then from a financial perspective, we spent over $1 million on just this one community in the last year. And we're most of the way complete with that project. So we had originally budgeted to renovate about 70% of the units. We've done 66 rehabs. We've done most of our common area improvements. So we've consumed most of our construction financing there. And just, we've been able to, this is a huge project to do in such a short amount of time. Like, our team, I would say at least 50% of our management resources of our whole management company have gone into this.
I may or may not have cried many times. Like the real deal, guys. Like, we are managing this portfolio and it is tough at times.
Yeah.
But we're happy to do it because we see the outcomes. But there were tears.
Elaine has been very personally involved in managing this community. There was just 50% of the tenants had delinquent rent payments when we took over. So just treating those people with dignity and respect and getting them on the right track, and it was very, very, very hands-on to make this transformation possible.
Next up is the Riverview. So we acquired many units in a condominiumized building. So we don't own every single unit yet, but we're making steady and sure progress toward that.
Got one 2 days ago.
Yep, we just got another under contract. Very exciting for Riverview is renovations are complete. This building has leased very well. I think I shared on our last webinar last quarter that this building has kind of accidentally become student housing. There was no intent for that or anything. We just had a couple of folks sign leases early in the season that, you know how there's just some people that are just connectors. Well, these two young ladies just happened to be connectors. And so they brought a lot of their friends and other folks from school to lease at Riverview. So it has a bit of a student feel. It has a really nice community vibe. We love how open these units are, lots of natural light. Many of them are 2-bedroom units, and they're leased by 2 different roommates. We put all new appliances in, all new flooring, very excited about that. Another thing we did was we put all new electrical meters in the entire building so that every unit is individually metered. That's important for the value of the building because that then shifts the electricity cost to the resident. All the studies show that when someone is financially responsible for their electricity, they tend to use less electricity. So it's also much better for the environment. We just finished that like
days ago.
Okay, I was going to say a week ago, but I know like our team is just rapidly active. Finishing that. So very excited about that. We've also put new fiber optic lines to all of the units, and we just turned on our gigabyte internet service.
That literally turned on 48 hours ago.
Yeah, so lots of changes at Riverview, even in the last week. Here's the wiring closet. I'll let my IT guy speak to this.
I actually went through a Cisco networking academy. I'm actually like very rigorously professionally trained in this stuff. And you can see that image on the left is what the data cabling looked like when we bought this building. And the stuff on the right is what it looks like now. I suspect that you don't need to be a Cisco certified networking associate to know that the thing on the right is better than the thing on the left, but hopefully it gives you some grasp of just how crazy town this wiring situation was when we stepped in. This photo is kind of the epitome of just how we create value. You can just look at this photo and know, okay, something better is happening. In the thing
I don't know what, but it looks good.
That's right. Yep, that's right.
We also restriped the parking lot, so very excited about that. That like crisp look when a parking lot is freshly black and all the paint's fresh. That's what the building looks like. So very excited about that. We added some parking spots during that process as well, and then we actually expanded the parking lot just a little bit with our own in-house equipment. So again, speaking to vertical integration, as you can imagine, asphalt contractors are very, very expensive, but by having the people who know how to do this and acquiring the equipment and the materials, we're able to do that at a drastically reduced cost. And then we're also able to do things like, minor repairs and those sorts of things so that we get the longest life possible out of this parking lot. So very excited about that. And then of course we installed a dog park.
And I think this is a good 15-second microcosm for you to understand how we create value. So in this picture on the right, you can see there's kind of this rectangle cut out. So there was additional island of landscaping. And we used our equipment because we now own an excavator and a bucket loader and stuff like that. We use our own equipment to excavate out that dirt. And there are already those concrete parking barriers there. So we just kind of shifted those over to the right. And then we put in asphalt, and our team installed that own asphalt. And that created enough of an aisle that we could add all of those parking spaces on the left side. So we were able to add a huge amount of parking spaces because there was this bottleneck in that one little spot in the parking. So this whole thing cost us, I don't even know, a couple $1,000 or something like that. This would be an outrageously expensive thing to go hire contractors to do, but we were able to do this in-house for just pennies on the dollar. Yeah.
Very excited about that. The Colby, so the Colby was a $2.65 million purchase price, 32 units of apartment buildings, 2 16-unit apartment buildings, 2 single-family homes, and 2 vacant lots. The plan for Colby was to renovate it to a standard that we're excited to put our name on and to provide good, high-quality housing for folks, but not to renovate it to our usual standard, because the vision is that sometime in maybe the next 7 to 10 years, this would be a redevelopment project as, say, the Hospital of the Future continues. Very, very valuable land here. So you can see there just the very minor renovation we did with new flooring, ceiling fans, paint, sockets and switches, just enough to make it nice and livable. We had to do some very serious roof repairs, and then we actually had to vacate one entire building because it was so infested with bed bugs that we were not able to treat it with people living there. It tells you the condition of what this community was like when we acquired it. So now it's safe, it's livable. This is very walkable to Mayo. And there are a lot of folks that come to Mayo from other countries in the world as scientists, and their pay is very low, like much lower than, say, a resident physician. And they need, very affordable housing. And they often don't have US driver's license or cars because they're only here for, say, that 1 year. So this has, kind of that population is served by this building. And that's been, really neat to see that that's a whole
Huge
population that
transformation.
we've not been able to serve before because we didn't have something that was within their price point. So very excited about that.
This building is killing it. We own it with cash. Would not have been eligible for financing with just how poor the condition was, and we can start slowly working on a cash out refi now. Like this could be one of our fastest cash out refis we've ever achieved on an apartment building. This is doing way better than we ever could have expected.
Absolutely. And then let's shift gears to the assets held by Fund 1. So we just covered everything held in Fund 2. In Fund 1, we have Nicholas, our single family home portfolio, and then half of residences at Discovery Square, which we already did the status update for that building. Nicholas continues to be slow and steady.
Yeah, this is all of Fund 1 is now pretty stable, relatively speaking. And so these are kind of boring updates here. But you can see we were projecting 3 to 10% rent increases for 2023, and we've already achieved a 12.3% rent increase at Nicholas, just blowing away our most aggressive expectations. Nicholas leased like crazy through the high season. It's got a few vacant units now that we're putting into service as short-term rentals, like that ADA unit that Elaine mentioned, that are just perennially difficult units to lease. And I'm very optimistic to see how this thing performs on a short-term basis, but on a long-term basis, this asset is it's doing great. It's quiet, it's boring, it's steady, and we love this building.
You can see here the data that we're able to have firsthand because we're so deep into the operations of our portfolio. So, that's not the point of this slide, but my eye just caught it, that our 2-bed, 1-bath lease renewal rate was only 3.5% this year. And Nick had mentioned that our 2-bed, 1-baths tend to not do as well for long-term rentals. It's folks who want a 2-bed apartment. It's often 2 unrelated roommates. So they want, to each have their own private bathroom. But then you can see our 1-bed, 1-bath, we had a 7.4% rent escalation this year. And our studios and our 2-bed, 2-bath were both a little over 12. So this is the data that, when we're looking at this and we're looking for patterns and we're, talking to our leasing team and figuring out how can we optimize things, we don't necessarily want to take our studios or our 2-bed, 2-baths out of circulation in our long-term rental portfolio, but our 2-bed, 1-baths, there's like a clear opportunity there to let's try something new and let's see if this other avenue could generate more revenue for the portfolio. So I just, that wasn't like the point of this slide, but it caught my eye.
Right there.
That's how, as we're analyzing this data, that's what we're looking at as we're making decisions of how to guide the portfolio. Rent for Q3 was $440,800. So we talked about our rent escalations, our upgraded internet, steady rents, and just a quiet, consistent asset.
That handsome asset.
It was a finalist for the best apartment community in Rochester. So very excited about that. We'll have a very nice plaque installed at the building. The single family home portfolio continues to do very, very well. I'll plant some seeds that the strong and steady, consistent performance of the single family home portfolio in Fund 1 has us thinking of a single family home fund. So let me know what you think about that. You all have my email address. Rachel can pop it in the chat here. I'm curious to hear from you what you think about a fund that would be dedicated to single family homes. This is kind of a mini fund. There's 31 properties held by Fund 1 that have done so well. So I've just been kind of cooking up the idea that we could launch Fund 3 as a smaller fund that would focus on single family homes. Again, none of that is set in stone. Fund 3 isn't launching tomorrow. Don't go spreading rumors for me, guys, and have 1,000 emails that I have to respond to people, but it's something I'm cooking on. And I would love to hear your feedback about what you think about that.
0 vacancies. This portfolio has absolutely crushed it this year. At no point did we have any more than a handful of properties available for lease. I think we've got 2 SFRs in the entire portfolio out of hundreds of them available for lease. Just the single family homes have been doing extraordinarily well.
Yeah. So there's our rent growth for the single family homes. It dipped just ever so slightly in Q3 just because there was 1 vacancy for a small period in early Q3.
And overall turnover vacancy. That's when we turn over a lot.
Exactly. During the summer. So just very excited about this just trajectory and thinking going back to our roots, we've always loved single family homes. We did not stop doing single family in Fund 2 because we had abandoned single family or anything of the sort. We merely did not have single family homes in Fund 2 because there weren't opportunities at that time. But looking at our historic portfolio, the bread and butter of our own financial independence, this portfolio, it has us really chewing on the idea of a single family home portfolio.
Yeah, we tried to buy homes in Fund 2 and there'd be 15 offers and go 30,000 over asking. And that's not the case anymore. Prices have not dipped in Rochester. We're down 2% year over year in price, but there is an opportunity to buy. There's absolutely an opportunity to buy. So we're noodling on that.
Absolutely. That is everything. If you'd like to put your name on the wait list for Fund 3, you can do so at blackswanfund3.com. If you'd like to join us for our in-person event and get to see all of this and more for a whole weekend with not just us, but also our team and also your amazing fellow investors, both Black Swan investors and non-Black Swan investors. So don't think that you have to be an investor to come to our event. About half of the folks have invested with us and half have not. And we'd love to have you, and you get to this and just so much more immersive experience. And you can just see like light bulbs go off in people's heads when they see the buildings and they see the parking lots, like, oh, that makes so much sense now that I've seen it. So we'd love to have you. There's of course our contact information. If you have any questions, I'm sure Rachel, will put all of that in chat. Anytime there's an email that comes out on our mailing list from our company, if you reply to that, that gets right into my inbox. So that's a quick, simple way to reach us that way as well. I believe that we hit all of the questions. I imagine maybe many of you are, kind of on your lunch hour or something and maybe listening podcast style. So if you have any questions that you weren't able to pop into chat, please just send me an email and I'm happy to address those. It may be a little delayed on response. You can copy Rachel. Nick and I are heading out of the office for a vacation this week, but we'll always make sure that your questions are answered. We have so much gratitude for you as always. Crush your Q4s, guys. I find, in my own life, in our real estate portfolio and all of these things, the people that really tackle Q4 really set themselves up for success for the next year. I hope you see the things that we're doing, to prepare ourselves for a really good Q4 so that 2024 is a really solid year with these new ventures, with this deeper vertical integration, cooking on this idea of launching a single family home fund. We're here to serve you. We appreciate you. We hope you all have a great week and thank you for your time.
Thanks.